What up, guys? Today I will teach you how I'm trading today, where I'm looking at, stuff like that. Okay, there's nothing new I can teach you, but I teach you how I'm looking at the price at the moment and what I'm looking at the price action and how I'm trading. Okay, so let's go. First thing you do, it's daily chart. Here we have something interesting in this day. We are going down, market structure shift at the daily right here. So we have here until here the EPDA 20 low. Maybe we will see this low taken out or support at some point here. So we have low to the high equilibrium level, and we have here this fair value gap at discount level. So this is a EPDA 20 fair value gap, because below here you have nothing, you don't have a fair value gap below here, but here you have one, the deepest fair value gap at the discount. So something like this, almost right there because we are in the CFD, but I'll show you. As you can see here, NQ continuous contract right to the level right there. Okay, so the last fair value gap, so the deepest discount fair value gap it was this one. Price touched that, and when price do this, we would like to see something going down, inversion, and keeps going lower, or something like this, going down, inversion, keeps going lower, or we'd like to see what happened here, going up, seeking buy side liquidity, imbalances, and this breaker. Okay, so let's come back here at the CFD, and we'll look at the price action right here. So Friday, and when Monday starts, we would like to see lower prices or higher prices. So the lower time frame will tell us what's going on, what will happen. Okay, so for our chart, I put the replay right here. So this is Sunday, Monday, 2 a.m. candle for 2610. Okay, so now we'll look for something. We have sell side here and we have buy side there. We don't know where price will go, but we have this order block right here. We know this low touched that fair value gap at the daily chart, and this is another block, and price reacts right there, okay, so maybe we will see higher prices. Here at the 4 hour we have nothing, you just have our other block, liquidity and relativity call highs, liquidity imbalances. This imbalance I'm looking like this. You could take this standard deviation and measure like this, 25 lower quadrant, midpoint, up quadrant, 75. Okay, you could do this. So here we don't have too much on our chart. Here's something great. Liquidity grab and reacts fast. We have this week respects, and that are the block in the 4 hour chart, so it's a good thing. Let's see 1 hour chart. Midnight, accumulation, manipulation, maybe distribution higher. I'm looking for this type of things. Let's go to the 15-minute chart. Here we have something. New York PM low, last day, took out. London open. London open right here, comes down, reacts. This is a balanced price range and a fair value gap. What I mean is something like this, as you can see here. Balanced price range. Right there, balanced price range. So we have this week touching that 4 hour order block, as we have that in mind. We don't need to keep drawing things in our chart. We just keep that levels in mind. For our order block, react takes out liquidity. That's good. And balanced price range, fair value gap, and this one acts like a breaker or a mitigation block, and this one too, this level here, high, low, low, high, lower, low, this is a breaker, and maybe price will react right here. I would like to see relatively equal highs right there. We could take this thing like this to see if we have something at the 15-minute chart right there. Bodies of the candles almost hit the -2 standard deviation. Let's see. I will do this. I would like. I tried doing this. As you can see, I'll keep testing the levels with the standard deviation. And here we have our level. Look, -2, -2, 2.5, right there, exactly. So accumulation, manipulation, and will distribute higher. So we can take this right here, our levels, but we need to look for something like this 1 hour chart. We have our level right here. Okay, this is something, the things that I look. We have this high, that low. We have our projections higher, but we are in the 15-minute. What do we do? 1 hour. I would like to see the power of 3 of the daily candle. So there, change the things a little bit. Swing high and swing low. So I would take this like this. So the levels are higher. Okay, this is a previous day high. How I do that? Daily chart. If we know price will going higher, we mark out the previous day high, like this one, that one, that one, and maybe that one right there. Okay, that's going back to 1 hour. And this is something we'll do like 4 a.m., 5 a.m., 6 a.m. right here. We only trade New York AM session, so 7 a.m. forward, okay? But we need to know what price are doing before we start trading. So our levels here, accumulation, manipulation, react, 4 hour order block. Let me show you again right there. Okay, and this 1 hour swing low, swing high, it's a daily power of 3. So midnight is here, this white line, open, low, high, close, accumulation, manipulation, distribution. Okay, relatively equal highs right there, and -3 and -4 right there. Another block, and this imbalance, this fair value gap imbalance right here, and this relatively equal highs. So when we see this price action here, we will start looking for higher prices. 15-minute chart again. So as you can see here, we have price comes down right here, fair value gap, maybe a breaker, reacts, now starts going down. So accumulation, manipulation, down. Why manipulation down? Because we'd like to see higher prices. So every move down, it's a Judas swing, it's a manipulation. As you can see here, everything here, it's accumulation, as you can see, back and forth. So accumulation, manipulation, distribute higher. So now we have, let me adjust this right there. Our daily swings to projection higher. Let's go to the 5-minute chart. And midnight open, accumulation, as you can see here, going down. How do I know? I could take this like this to take some measurements. I could take this, the last swing high, and this swing down. As you can see, wait, right there, -2, 2.5. As you can see here, price reacts right there. Didn't close a candle below the 2.5, so maybe we will reverse. So this is a breaker, as you can see, price comes down. So this is a breaker inside the macro. This breaker was formed inside the macro 403, 403, 430. Okay, so this is our breaker. Price closes a candle above the breaker, comes down. You could buy here, but we need to be careful because we have this level here. So that's why price retraces a little bit lower. Why? 15-minute chart, it's a balanced price range, and the fair value gap starts right there. So we have that breaker on the 5 minutes, but we also have the balanced price range and the fair value gap here at the 15-minute chart. So price starts going down, and what we have here, the 6-hour opening candle, 6 a.m. candle. So this is a 4-hour candle open. What I'd like to see, I would like to see a power of 3 here. So open, low, high, close. This is a power of 3. Open, low, high, close, going higher. So we could buy here when price reacts here or here. We go long. And we could do this. This is a power of 3. This right here or right here. You could use this one, the last down candle, in this case here, to have your levels for scalpers, right? In this swing. As you can see, 2, 2.5, 2.5, it's near the equilibrium point. 4, but this one here is the daily power of 3, so maybe we could go higher. As you can see here, this is our original consolidation. So it's a market maker sell model to buy model. So this is the first target we will seek. Look at this. This is Asia session high. The first target is there, but we could look for -2 right here, -2, because relative vertical highs, New York PM high yesterday and New York lunch high yesterday, previous days. Okay, so right here inside this range, the main range. Okay, so we will go long here, something like this. When it reacts at the break, I will buy. My stop loss will be below this candle, this one. The most safe stop loss in this case will be below here, right here. But it's a huge stop loss. I won't do that. I don't care if the price stops me out here because I have the breaker and I have this balanced price range. I don't like to see price going lower. Okay, I would like to see price inside this range and going up. Okay, my target will be here or there, but I will take the target here, so it's a good trade. As you can see, $8.20, $8.40, it's a macro, and there, okay, right there. If you lost the movement here, you could take this. As you can see, this consolidation, you could do this if you want. You see this 2 hour in this price action, guys. Maybe this thing that I will show you right now maybe won't work in other ways, but in this price action right here, align with the 2 a.m. candle, 4 hour 2 a.m. candle, this everything up at this, all these up close candles, it's a breaker right there. Close above, comes down, fair value gap, you could buy here, stop loss below here, and again up, down, could buy here, stop loss below here, 2 a.m. candle and the breakers, and going long. Okay, this is how I'm looking at the price. And this 1.5, this is our silver bullet zone. Right there you could buy, stop loss below these swing lows or the breakers here and go long. And why go long? Because we have our range, our previous daily high. That's where price will be going, right there. So this is how I trade. I'm looking for the power of 3, midnight, consolidation, accumulation, distribution, 2, 6, 10, 2 a.m. power of 3, as you can see here, accumulation, manipulation, 6 a.m. power of 3, and 10 a.m. power of 3, open, low, high, close, as you can see here. Accumulation higher, so open, low, high, close, this accumulation right there, 2, 2.5, 4, okay. This is what I'm looking when I'm trading, and I will show you something else about EPDA. So about EPDA in the lower time frames, if you would like to buy here, you could do this. You don't need to get from the market structure shift candle, but the lowest low candle that start the movement higher. So this swing low is the last down close candle before the movement up. Okay, so start from there. 20 EPDA 20 right there. So low, high, 20, prime discount price from discount level to prime discount again and going higher. EPDA 20 is taken out. What price will you do? Retrace. For value gap, institutional order flow, and drill, you could buy. EPDA 40. As you can see, from prime to discount, discount will buy, price taken out, EPDA 40. This on the 15-minute chart, of course, and EPDA 60. Almost that level, that high, but in this case is this one here. So 20, 40, 60 right there. Okay, or you could do this 1 hour chart, same thing but with other time frames. So EPDA 20. So now we have something interesting because we have this low, and EPDA 20, it will be this candle here. So we are in a discount level, prime discount, 20, 40, EPDA 20 high, 40 high, price takes out, and EPDA 60 right there. 20, 40, 60, okay. This, it's a possible target, this one too, and that one, okay. And previous day high right there. At the daily time frame, we'll use like this. Market structure shift happen, swing low, swing high, swing low. Market structure shift happen here, November 2nd. So first day when the market structure shift happened of that month. So November 2nd, we would get the first day and start counting from here. So we'll get low, as you can see, the same concept that I showed you in the lower time frames, but here in the higher time frame. And there's a little bit difference because of that. The market structure shift happening here, we get the first month, not the lowest low candle, okay? So EPDA 20 high, it's a target right there, retraces, buy, go long. EPDA 40, these highs, and EPDA 60, these highs right here, and possible those highs like you saw in the lower time frames. We have 20, 40, 60, and the previous day high. Okay, you do this, look back, and you could do this forward, like EPDA 20 high, 30, as you can see right there. This is algorithmic, guys, that high. EPDA, what high is that? EPDA 40. Some people say IPDA. I listening to ICT, I heard ICT saying EPDA sometimes and IPDA sometimes. enterprise bank delivery algorithm, EPDA. So 20, 40, and 60. 60 EPDA 60 will be on the January 26th, as you can see here. So we don't have the EPDA 60 high yet, not yet, but in this day, January 26th, we will have it. But here something happened. Why this EPDA 20 low? Let me delete this lab. This is something I was studying. Why this? When the market structure shift happened at the daily time frame, happens here, January 3, because the candle closed below here. So January 3 maybe 2 or 3. So we have what we do. The first day of the month of that market structure shift happened. So in this case will be the January 2, because this one is December and January. Market structure shift happened when? January. So start counting from here. Look back. Now we have prime and discount levels, equilibrium level, and because we are in the CFD, so equilibrium level, and discount levels, and we have the EPDA 20 low. If price, like I said in the first seconds of the video, if price didn't take this low, we will see reaction from this fair value gap, as you can see here, or this order block, and keeps going higher. Why? To make the EPDA 60 high, as you know, okay? And we have this too. I'll show you something. This is the continuous contract, and we are seeking those swing highs and that highs. As you can see here, we have a fair value gap here. In this case, I have these settings set. As you can see, if I do this, we are already taking that out. But if I set this on, not yet. So we have this level. Maybe we have these levels. Why? I think price will go in there. I'll show you. Now we are back in the CFD, and you could use contract NQ or whatever you want, but here is CFD. So weekly chart, we have this standard deviation, swing low, swing high, 2.5 levels, and we have the -3 and -4 level. Remember that swing highs that you saw on the weekly chart, NQ continuous contract, and we have something at the daily, as I already show you. This high is EPDA 40 high, so we have something like this, EPDA 40, and with EPDA 60 will be higher, taking that buy side at the weekly chart. Okay, so this is how I look at the price and how I trade. Okay,